Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Brian Joyce. He's the managing director on Nasdaq's Market Intelligence Desk, also our resident market technician. Brian, it's great to have you with me as always. I'm kind of excited to talk about Bitcoin because obviously everyone's looking at the S&P, the Nasdaq, and the Dow Jones with everything going on in the markets. But Bitcoin has made quite a move this week.
Yeah, it seems like we haven't had much of a chance to speak
Yeah.
about with everything else going on, but certainly a lot of price action, a lot of volatility today. It's kind of catching up now with all the other asset classes, equities, bonds, and just seeing
I want to pull up
dramatic price moves.
our first chart. Now this is Bitcoin on the daily, and what was so interesting, and we'll get the first chart in a moment. There we go. That big drop that we had, that happened on the overnight or on the weekend because Bitcoin markets are open then, and that actually predicated what happened on the S&P and all the other major averages.
Right, so this is the chart of the Bitcoin daily. It's had a pretty remarkable week, I should say. Mm-hmm. As you noted, it gapped down on Monday about 14% by the end of the day. Next two sessions, it was relatively flat. If you could see just above the top yellow arrow, we have like what we'd call a bear flag. And then yesterday and today it was down 27%. And then today's low about 31%. So phenomenal move to the downside for Bitcoin. Similar to gold, people are wondering, they thought this was maybe, a safe haven kind of asset, particularly if you've got the Fed now injecting massive amounts of liquidity, $1.5 trillion in the repo market. Today they announced QE. They're going to go out to the curve all the way out to the 30-year with purchases. I think it's like $80 billion a month. So you would expect things like Bitcoin to trade up on that. But what I think the bigger issue here is in the very near term, you have the source of funds. Investors need liquidity, and Bitcoin has been doing well. It's still up year over year, at least it was up until this week. And so you need to sell even your winners in order to offset what's going on in other parts of your portfolio and the margin calls, things like that, et cetera.
Well, let's take a look at the weekly chart on Bitcoin just to get a longer term outlook. What is this suggesting in terms of price action?
Well, so this is very interesting. So the 200-week moving average, which is the violet colored line right here, is typically what technicians will look to as their secular trend. And you can see it's been support on major pullbacks for Bitcoin last year in January of 19. When we declined about 85% off of the prior year highs. Back in 2015, we had a very similar 85% decline, and the 200-week again was the support level. Now, this week here in Bitcoin, with today's price action, it was down about 30% below the 200-week moving average. It's the first time it's broken below it since all the way back in 2015. So it has recovered much of that. It's about maybe 6% below it. If it closes below it this week, it's not the end-all be-all. Let's see what happens next week if there's downside follow-through. But and also I would just note in early 15 we went about 20%, maybe 16-20% below it. So, but if this does break down below this long-term moving average, I think you'll see a lot of people questioning whether or not this secular bull market in Bitcoin is still in play, or is it now entering in a bear market.
All right, let's take a look at our next chart here. Of course, we want to take a look at the broader market on the S&P 500. And again, we're trying to show just how volatile the market is. I mean, these are pretty incredible moves that we have. The velocity of the moves is also what's been astounding.
Yeah, the couple of prior times we spoke about the S&P, we were looking at the daily period charts, and it almost looks like a straight line down. But if we zoom in, we have the hourly candlesticks here. And what we can see is that we had an initial move over approximately 7 sessions, down 16%. We'll call that wave 1. We had a relief rally over just 2 sessions, about 280 points, and we gained about 10% there. We stalled right at the 50% Fibonacci, which was also right in line with the gap level from one of the prior sessions of the prior week, I should say, and that was around 31.16. So there's your cluster of technical resistance. We made a double top there and rolled right back over, and now we're in wave C, which yesterday bottomed about 21% off of last week's high. The total move down from the top, which is about 16 trading sessions, has been almost 27%. So just a phenomenal move to the downside. If you see many of these little rallies along the way down stalled at those gap levels or within the gap. So gaps are, a common area where you could expect resistance or support in downtrends. They often act as resistance on bear rallies up to the upside. So that certainly was the case here, proved to be the case on March 10th or 11th, again back on the 8th or the 9th. And then initially, as we noted, on the 4th or the 5th right there. So gaps can be good areas where you could establish risk levels if you want to enter into a new trade. Again, you should always know your time frame, make sure you have a proper position size, and if it goes against you, don't try and be a hero and wait it out thinking you're right. just cut your losses and move on.
All right, let's take a look at our final chart here. We have the 10-year, and I think this has been really one of the incredible stories. It's not normal or it's unusual to see the kinds of moves in terms of the basis points. Bonds don't trade like that, and if you look at that cluster over the past 2 weeks, it's pretty volatile.
Absolutely. We went down to 31 basis points, and again, we've covered this before, but looking at the daily charts, if you want to zoom in on the hourly, we could see that we bottomed at 31 basis points. We see a lot more activity and volatility, and maybe we could come up with some potential resistance lines on where this relief rally that we've been seeing the last 4 days, last 4 trading sessions, could potentially stall out and we roll back over to the downside, if at all. So we bottomed again at 31 basis points. Today we hit 99 basis points on Friday. That's 5 sessions. We rallied over 65 basis points. So we could see there's been some volatility between 93 basis points and 1.04%. So that's potentially a resistance level. And just above there is the 20-day moving average. So this is an hourly candlestick chart, but we used a daily moving average, the 20-day moving average, which is a common retracement level for a security, an instrument, whether it's a commodity, whether it's an interest rate, whether it's an equity. It's a common retracement level for something to bounce back towards. So 115 to 104 is the area that I would look to if we see some further upside that potentially the 10-year could stall out and maybe roll back over.
All right, now to wrap up here, do you think we'll continue to see volatile markets that we've experienced over the past 3 to 4 weeks?
Absolutely. You know, the volatility is definitely here to stay. If we do have a relief rally that's longer lasting from what we've seen so far, maybe that would be spurred on by some stimulus by the government that maybe the market feels there's some credibility towards. Maybe there's some positive data coming out on the medical front regarding this virus. So if there's whatever reason it may be, if there is a stronger relief rally, the volatility should come down a little bit, but I don't think it's going to go away. I think we've, I hate to say it, but it seems like we're in a bear market. And if we have a relief rally, we'll have to just wait and see how far that can go. And once we roll back over, then that volatility would likely increase again.
But something for everyone. Traders have been looking for volatility because the past year and a half, 2 years, it's just been one way up on the charts. So you have something for traders, you also have something for long-term investors. This could be an awesome opportunity at the end of the day for a longer-term investor.
Certainly could be. I mean, but it depends what your time frame is.
Right.
And it could also be good for short-term investors. If you're a day trader, this is what you like.
This is a market you've been waiting for. Yeah.
Yeah, absolutely. It certainly presents a lot of opportunity, but it's certainly something that you should certainly know what you're doing. You want to make sure that you have a proper risk management system before anything else.
All right, Brian, great stuff as always. Thanks for joining me at MarketSite. And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.